Hello, good morning, good evening, everyone. We warmly welcome all the participants to the first virtual session of NDC Finance Communities of Practice. We will wait for a few more minutes for people to join in. Thank you. Hello, everyone. Once again, on behalf of the organizing team, we welcome all of you to the first virtual session of NDC Finance CoP today. Thank you for your patience and taking time to participate in today's webinar. And my name is Anandan. I work with Asia Leads Partnership, hosted by ICLEI South Asia, together with ICLEI East Asia and Southeast Asia regional offices. So before we move on, here are some housekeeping rules for today's webinar. For most of the time, the participants will be in mute mode. We will unmute you during question answer session, open discussion, and during introduction sections. This is just to avoid noise and other echoes. We will unmute you. When we unmute you, we still encourage you to self-mute when you are not speaking. At any point of time, please type your questions at bottom right hand side. We will try to answer as much as possible during the webinar. If there are any outstanding questions, we will continue to converse with you after the webinar through email and other modes of communication. And under handouts option in this dialog box at the bottom, you can download today's presentation. And if you haven't received it in email before, you could also use the chat option that is available in the window, just to let us know if you have any technical difficulties or anything else you want to discuss with us. And we will now quickly run through the agenda for today. Ritvik, next slide, please. Yeah. So I will give a very short brief on what is this NDC Finance Communities of Practice is about, and a brief on the organizers, Leads GB and Asia Leads Partnership. And then we will have a round robin introductions, followed by we have a presentation from Ms. Bridget, Head of Market Analysis, Climate Bonds Initiative. She'll talk about green bonds, and then we will have open discussion. We can discuss, you can ask questions during the open discussion. And then followed by that, we have a presentation on blended capital by Alexia Kelly. She is also the co-chair of Leads GB Finance Working Group. This will be followed by open discussion again. Finally, we will close the webinar by giving you a gyan on the next steps. And going on to the introduction about the organizers and about the NDC Finance Communities of Practice. So as I indicated, this Communities of Practice is launched by Leads Global Partnership and ALP with technical support, the mainly spearheaded by Finance Communities of Practice. It's the technical wing of Leads Global Partnership. And next slide, please, Ritvik. Yeah, regarding Leads Global Partnership, it is the larger global partnership that brings more than 300 institutions across government agencies, technical institutes, NGOs, and various people working in Leads. It was founded in 2011 to facilitate peer learning, technical cooperation, and information exchange. to promote low emission development strategies. As you can see in the picture, it covers the entire global region. It operates through 4 regional platforms: Asia, Latin America and Caribbean, Africa, Europe and Eurasia. The technical activities and requirements of regional platforms, national governments and partnerships are supported by 6 working groups, as you see in the picture, namely transport, subnational integration, co-benefits, Apollo, finance and energy. And next slide, please. Yeah, about Asia Leads Partnership, it has more than 800 members. We have 40 plus national government representation. We promote leads in Asia region through our services, like through coordination, collaboration and partnerships. We do identify and share tools, resource materials, conduct webinars, etc. and raise awareness. We also share success stories and help replicate projects in the Asia region. We connect national governments, experts, leads, practitioners. We also do various workshops, etc. and connect people to bring about peer-to-peer learning. And we also encourage you to please visit our website for more services and activities offered by both Leads GP and Asia Leads Partnership. So you can get access to lots of tools, resources, and additional information on communities of practice and its activities. The next one, coming to the priority areas, usually our regional platforms and working groups continue to identify needs of countries in the region, and it comes out with the yearly work plan based on the specific needs and priorities communicated by the country governments and the members. So for 2018-19, 4 priority areas are identified: energy, subnational integration, finance, and multi-level governance. So communities of practice are launched in the 4 thematic areas. So the thematic communities of practice is an interactive platform. It brings practitioners, experts, national, subnational governments, and various other peoples, government under one platform, and it enables sharing and learning from each other, not like top to bottom, but everyone's at same level. As a group learning, it encourages that. And under energy communities of practice, it focuses on grid scale renewable energy. We had a couple of online sessions on energy planning and smart incentives and enabling environment for grid scale renewable energy. We also had organized in-person workshops at ASF Asia Clean Energy Forum in June. In each and every communities of practice, we do have some in-person workshops also to bring peer learning and exchange between CoP members. And we also have a session coming up on grid integration studies for variable renewable energy on August 29, followed by RE auctions as well. We follow our ALP website for more details. And for transport, it focuses on clean mobility. So I'll just run through the slides quickly, considering the interest of time. The first session dealt with public transport fleets, and the upcoming session, the second week of September, would focus on intermediate public transport fleets. So interested people can look into the website again and can join on that. And multi-level climate governance communities of practice. This is one of the key and very important communities of practice, and being many countries and subnational governments have shown interest in multi-level governance. So this was launched very recently, And the next slide, please. Coming to NDC Finance Communities of Practice. So many development institutions, banks are investing a few $1 billion. They are pumping in some money into clean energy, but apparently this is not enough to meet the kind of commitments the NDCs, what is proposed in the NDCs. So this calls for an urgent need for accelerating deployment of capital, and also there is a need for strong relationship and linkage between public and private sector on enabling environments for finance mobilization. To bring about this and to address this need, this NDC Finance CoP is launched by Finance Working Group, leads GB and ALP. So the CoP will also help its members to develop strategies and interventions to lower the cost and risk of capital for RE finance. So initially, the NDC finance communities of practice will focus on two key financial models. One is on green bonds and the other one is on blended finance. Coming to the CoP membership, so it consists of members from national and subnational government, organizations working, analyzing, designing, financing and implementing RE projects. Next slide, please. So far we have participation, the CoP membership. We have under NDC Finance CoP, we have 50 plus participants from more than 10 countries, including Thailand, Philippines, India. So the countries are listed. The countries and the members, the CoP members are coming from diverse background, like international organization, funding organizations, national governments, technical institutions. So it provides a greater opportunity to learn from each other. And this network is envisaged to support CoP members based on the requirements that arise from time to time. So for each thematic area, the topic is selected only based on what members see as a need or priority. So going forward, this will continue. So the network is member driven. Activities are framed under each communities of practice as per the support needed or priority of countries or CoP members. We want the momentum to carry forward beyond this virtual session. From time to time, we expect members to give their feedback and emerging needs so that the CoP would work towards addressing that specific need. So next slide. Yeah. About NDC Finance CoP, what it offers to its members. Yeah. So the CoP offers opportunity for peer learning and for knowledge exchange. The activities in the CoPs are planned in such a way to achieve this peer learning and knowledge exchanges. As part of this communities of practice, this finance. Ritik, could you please mute? Okay, thank you. As part of this finance communities of practice, around 2-3 online moderated sessions will be planned. We also plan to have one in-person workshop, minimum one, for knowledge sharing, etc. It also provides opportunity to learn from experts and to discuss individual countries' challenges and approaches. Based on members' demand, we customize the activities. It also offers information on resource materials, provides access to various finance tools, training materials, and it compiles good practices. A few resource materials would also be exclusively developed as part of the communities of practice. And one very important thing for the government and its representatives, no cost remote technical assistances are available for COP members. So countries can avail this no cost technical assistances to advance their work. We also plan to provide technical deep dive support to 2 early mover countries in Asia region. So this is all we have in the introduction. We will now unmute the participants. I will now hand it over to my colleague, Mr. Nikhil, who will take over from here for the introduction section. Thank you.
Thank you, Anandan. Good morning, everyone. Good evening, good afternoon, wherever you are. Thank you again, once again, for joining. We see great participation today. And as Anandan has mentioned, this is an interactive group. So we'll get right to it, and we'll go around and if you can quickly, in the interest of time, since we have, I hope you can see the list of attendees. We have around 27 attendees, so including the organizing team, it's around 30 plus. So if you can quickly, within half a minute, state your name and your organization, and maybe just your role in just one line. So we'll go alphabetically as per the attendees. So starting with Aditi Paul. So if you could also, on the panel, if you can see towards the left side beside your name, there's a mute button. So if you could unmute as well. Thank you. So starting with Aditi Paul. Hello, Aditi, are you there? We'll just move on to Alex Fisher.
Alex Fisher here. I'm leading the Climate and Environment program at the GIZ in China. Thanks.
Thank you. Yeah. Moving to Mr. Arun Bhandari. Again, if you could please unmute yourself on the panel to the left, you can see a mute button.
Hi, this is Arun Bhandari. I'm assistant professor at Amity University. We do teach on climate change and sustainable development topics. So yeah, that's it.
Thank you. Yeah, Aziz Pusakantara.
Hello, good afternoon. My name is Aziz Pusakantara. I work for Indonesian Institute for Energy Economics. Thank you.
Thank you. Yeah. Bethany.
Hi, this is Bethany Spear. I help lead a LEDS GP project called the Clean Energy Investment Accelerator, which is focused on supporting corporate renewable energy procurement and other commercial and industrial clean energy investments in countries like Vietnam, Philippines, and Indonesia. And we hope to be able to share more on our work with this group soon.
Thank you. If we can jump to Chirag Gajjar.
Hi, this is Chirag Gajjar. I work with WRI India and I lead climate mitigation initiatives.
Thanks, Chirag. Yeah, Deborah, please. Yeah, maybe we'll just move to Dong Tran.
Yeah, everyone, I'm Chan Fan Dong. I work as a freelancer, but at the moment I am a lecturer for the National University of Ho Chi Minh City on environmental decision making and climate change and clean energy. Thank you. Nice to talk with you.
Great. Thank you. Yeah. Ho Ming Liao. Hello. Go on, please, Ho Ming Liao. Sorry, we are unable to hear you. Maybe we can get back later. Yeah, Swan Polio.
Hello everyone, I'm Shen Polio, Project Office from Equity KCC. Thanks.
Thank you. Kat Kunika Kor.
Hello.
Yes, hello.
Yes. Yeah, I'm Kat from South Pole Bangkok office. Yeah.
Thanks, Kat. Yeah, moving to Marielle April. Yeah, we are unable to hear Marielle. So moving on to Madeline Joseph.
Hello everyone, this is Marlon Epañada from the Philippines office of Allotrope, which is one of the partners of the Clean Energy Investment Accelerator.
Thank you, Marlon. Moving on to Marlene. Hi, Merlin. Can you hear us? Sorry, so Merlin is part of the ALP team from Korea. So we'll move on to Neha Kumar.
Unmute. Hello, can you hear me?
Yes.
Yes, hello. My name is Neha Kumar and I steer the Indian operations for Climate Bonds Initiative. And one thing that everybody would probably like to know here is that we function with FICCI. We have established a platform in India called Indian Green Bonds Council. And the idea is basically to mainstream and accelerate the green issuances across a wide spectrum of sectors. But we also participate and contribute to the larger ecosystem of green finance. And we are a team of two, and my colleague will introduce himself.
Great. Thank you, Neha. Look forward to hearing more. So, Niharika, please.
Yeah, can you hear me?
Yeah.
Okay. Yeah, hi everyone. Niharika this side. I work in the capacity of an analyst with EcoForge Advisors, which is an advisory and consulting services firm focused on clean energy. And we work in the developing countries of South Asia, Africa, Southeast Asia. Thank you.
Thanks, Niharika. Okay. We'll move on to Sandeep Bhattacharya. Okay, if in case you are not able to give your introduction, there's also a chat option where you can just quickly introduce, type in your introduction. So moving on to Tanvarat Srichampa.
Oh, hi. Hi, my name is Juan from South Pole Bangkok. We now have project with Thai government and GIZ about climate finance in Thailand.
Okay, great. Thank you. Moving on to Tin Chin Hello.
Hello.
Hello. Yes.
Hello. This is Ting Chenja from Taiwan. I work in finance supervisory commission.
Great. Thank you. Moving on to Ugen Chopel.
Hello.
Yes.
Hello, can you hear me?
Yes.
Can you see me also?
No, there's no video option, but we can hear
Okay,
you.
okay. Hello, thank you for including me for the part of the program. So I'm just beginning to be the program, and then I just wanted to, more than me contributing to this program, I wanted to take, since it is my initial attendance to the program, so I just wanted to know what's all about the program. So, sir, as such, I worked with the Bhutan Chamber of Commerce and Industry as a private apex institution. So, although we closely work with the National Environment Commission, so at this point of time, I do not have any project in hand. But however, if you take me through the program, so I shall be happy to contribute in the best possible way.
Sure, Mr. Ugen. That's the intention, and we'll know more as we go on. Thank you.
Because just a moment, I think in 2014 to 15, even 16, I was part of the LEDs program with the National Environment Commission as a task force member. So for quite some time, I was not able to be part of the program after the CoP 15. And I was being transferred to my duty station away from the capital city, Thimphu. However, I'm still part of the chamber. So given the chance, I would like to be continue my participation for the lead programs.
Sure. There'll be opportunities, and we'll keep in touch with everyone.
Yes,
thank you.
Thank you so much.
Yeah, moving on to Ying Ren.
Hello, this is Ying from Shenzhen, China, for climate partnership.
Thank you. Yeah, moving on to Yulia.
Oh, hello. Hello.
Yes, we can hear you.
Okay, I'm Yulia from Taiwan, and I work for Ministry of Economic Affairs, Taiwan.
Thank you. Yeah, the last name is in Chinese, but I can see the email. So, Hichin. Hello.
Hello. Hello, everybody. Can you hear me?
Yes.
Hi, this is Yichen Chen. I'm from Taiwan, working for Ministry of Finance. Thank you, everybody.
Thank you so much. Yeah, and lastly, so we also have our presenters, Alexia and Bridget. If you can introduce yourselves.
Good evening, everyone. This is Alexia Kelly. I'm the co-chair of the finance working group of the LEDS GP.
Hi, everybody. I'm Bridget Bull, and I work in the market analysis team at the Climate Bonds Initiative. I'm based in Australia, but we have offices all around the world.
Thank you. Yeah, Jess, would you like to introduce yourself?
Yeah, hi, I'm Jess Swearingen, and I work at Orchard Capital and with Alexia at the LEDS GP Finance Working Group.
Thank you. Soumya?
Hello, everybody. This is Soumya Chaturvedula from the Asia-Let's Partnership. I'm a Deputy Director with Italy South Asia. We host the Asia-Let's Partnership. Welcome, everybody, to the webinar.
Thank you, everyone. And yeah, so we also have Anandan, who presented from the ALP team, and Ritvik along with him. So that's it. Now we hand it over to Alexia, and I request everyone to please mute themselves. And if you've missed out on introducing yourselves, you can, of course, add your introduction in the chat window. Thank you. Sorry, yeah, sorry, we will have Bridget presenting first. Bridget, can you unmute yourself?
Hi, everybody. This is Bridget Bull from the Climate Bonds Initiative. Just to check, can you see my screen okay?
Yes.
Yep. Okay, great. Good morning and good afternoon, everybody, and thanks for having me here on this webinar. Today, I'll give you a very brief introduction on green bonds. There are a lot of things happening all around the world on green bonds, which some of you may or may not be aware of. And I won't try to cover them all, but I will give you a very brief taster on what the green bond market is and what it's doing, what we're doing in it. And at the end, there'll be time for some more focused discussion and questions. So I hope to be able to answer your questions. So the Climate Bonds Initiative, the organization that I'm part of, and two of my colleagues are also on the line, Sandeep and Neha. We're a non-for-profit organization, and our core motive is to mobilize debt capital markets for climate change solutions. So what that means is to act in three different ways. The first is to mobilize and to try and act as a catalyst. That includes working with governments and developing policy proposals around green finance. We look at facilitating rapid and large-scale mitigation opportunities and infrastructure building. And we look to connect with all different partners and people all around the world, and different, whether government actors, in-country market development teams, issuers, investors, private sector, public sector. We try to connect all different people around the world in part of our mission. The other part of our mission is to inform. So a lot of, you'll see a lot of reports from us, some of them are on the side there, on what's happening in the green bond market, and we provide a lot of information to the market on what's going on. And the last thing we do is we develop standards around the criteria of what is green. So that is a really critical question in this market, and a lot of our work is involved in defining low carbon assets that are in line with a 2-degree world. And so we have a whole lot of experts from around the world, technical experts that assist us with these definitions and administered by us. And we have a certification scheme that's part of that. I'll go into that a little bit more later, but that just gives you a broader overview of what we do. So what are green bonds? Very basically, they are debt securities issued by any type of institution. And the key thing is that the proceeds are used to finance 100% green projects or assets. So that's the key thing. They are not complicated in structure, or the majority of them are not anyway. They have comparable pricing to other bonds. They can refinance as well as new projects. And most of the bonds that have been issued to date are investment grade. So they're really just like your regular, boring, vanilla bonds, but there is a green feature that is a bonus to them. They're not structured in any way that is based on returns of green projects. They are just like regular bonds. They can issue by any entity and have been issued by governments, corporates, asset owners, development banks, municipalities, all different types of issuers. And they can take a multitude of structures. And one of the important things that the issuer must do is report on what they are at the time of issuance, on what they are funding, and then later on following up on that. So that the projects are, the main thing is that the projects are green and not the issuer. That's a core concept of the green bond market. And the green label acts as a tool for investors. It makes the products very easy to discover, very easily available for investors to know that these are green investments. So that is the green, what are green bonds? They're really part of the role of green bonds is that they provide a bridge between global financial markets and climate mitigation and adaptation requirements. So on the one side, we have this huge global financial market. It's a $90 trillion bond market. Investors are seeking yield in this market. There are record low interest rates across the globe. And investors are wanting green investments. There's a $60 trillion investor commitment at the UN Climate Summit that they want green investments. And insurers have also committed to increase climate investments by 10 times by 2020. So there's a huge demand for green investment. And up until recently, very little of green investment has been in the bond space. So green bonds are really a tool to shift debt capital markets towards climate change solutions. So the financial markets on the one side, climate mitigation requirements on the other side, we have Paris agreements and various energy sector requirements that are needed for us to finance a low carbon economy. And green bonds are a tool to bridge those two things and to make that happen. And that's a really core concept of the green bond market. The market has grown rapidly in the last few years. The first bond was issued in 2007 by the World Bank and European Investment Bank were the first issuers. But really, there has been very little issuance until 2012 and 2013 when the market began to take off. And you can see some key figures from 2017. There was $161 billion issued, and that compares to less than 10 billion in 2012. So the growth has been huge. There have been over 1,500 different bonds issued, 38 different countries. When we say countries, we mean not the sovereign, but entities from those different countries. There have been many different types of issuers, and some very large bonds, including one $10 billion bond. It's also important to note that the types of issuers have changed over time. So in 2012, you can see the light blue shading was mostly development banks with a little bit of local government. And that has changed a lot over the years. And last year, non-financial corporates, financial corporates made up a huge percentage of the market, as did asset-backed securities and government-related entities. So you can see the development bank part of the market, although still very important, has shrunk as a percentage of the market. An important development in 2016 and 2017 is that we've seen the first government green bonds, and that market is growing and growing. So the market is growing rapidly. From a country perspective, we see the US and China and France for 2018 are the big issuers, but there are a lot of other issuers from all around the world. And within Asia, some of the highlights include China. You can see from the previous slide is a really large issuer. So China's green bond growth started by the introduction of some critical green bond regulation and guidelines from the government. So in other parts of the world, the markets have grown in the absence of any regulations or guidelines. And in China, the guidelines really kick the market off. So there are different ways that a market can develop. And in China, that has led to huge growth. Indonesia has been active in recent months, partly due to a sovereign green bond. India hasn't been very active in the last 6 months, but in 2017, Indian issuers accounted were in the top 10, and their issuance volumes reached just over 4 billion. And then there have been green bonds out of many different countries within Asia. A really important thing, and Asian countries have been pioneers in this regard, have been different standards and different regulations. I've mentioned already that China has been very important in this, at driving much more stringent regulations on what can be issued and what can be classified as green. But there have been others. So in the ASEAN has green bond standards out. Japan also has some guidelines out. The Chinese ones I've mentioned. India has, the Securities Exchange Board of India has produced some guidelines, and in Indonesia as well. And there are others around the world as well. So the guidelines can be really important. They're not always mandatory, but they can be very important in setting benchmark standards for issuers and in galvanizing a market and providing a catalyst for issuers to know what is green, for issuers to know what to do, and to follow some very easy steps. So they can be very important in catalyzing market. There have also been some support schemes. In Singapore, there's a green bond grant scheme available for different issuers to help them with the costs of issuance. And in Malaysia, there have been tax incentives for green Islamic finance, or green sukuk. So those have been really important developments that have happened in Asia, and the rest of the world has really followed those key developments. So what is being financed by these green bonds? Well, this is a split of 2017 issuance, and 2018 is quite similar. You can see renewable energy, which includes wind, solar, geothermal, makes up the majority or the bulk of financing. But green buildings and green property has been a growing portion as well. So this includes residential mortgage-backed securities and other types of bond structures. Transport has grown a lot in the last few years, predominantly rail and public transport investments. Water investments have also grown a great deal and now account for 13% in 2017. And that is up from almost nothing about 5 years ago. So that's been a large part of growth. And some of the smaller sectors that we see being financed are land use. So that includes sustainable agriculture and sustainable forestry, afforestation and wildlife protection. And then there's some that are not represented just yet. So industrial energy efficiency, we haven't seen very much in that. We didn't see any in 2017, but there are some talks about that. And then ICT, so technology, particularly broadband investments, some people see as green, and they've been talk about that, but nothing issued as of yet. So that's an area where definitions and clear definitions around green are needed. And in adaptation, we've seen a few adaptation bonds as well to increase resilience of cities, particularly resilience against floods. The types of issuers, I've spoken a little bit about this already, but this graph clearly shows all the different types of issues and issuers and how this has diversified a great deal over the last few years, which started with development banks, and now sovereigns are increasingly important, as are different types of corporations. So that's become hugely important, this huge diversity of issuers. But then the important question is, what is green? Now, this is the climate bonds taxonomy of what is green. And this is a really important part of the market, is defining this. I already mentioned some of the challenges in ICT, in technology sector. How do you define greenness within a data center? How do you find this within broadband infrastructure? And those are key questions that the Climate Bonds Initiative seeks to answer. You can see here we have criteria in a number of different sectors, and some we are busy working on at this stage. And what the criteria aim to do is provide some easy to use standards across different assets with the use of expert groups, and within each of these sectors, it provides very specific criteria on what is included, what can be included in a green bond, and what cannot be included in a green bond. So one example might be within solar thermal. Solar is very obviously green. Solar thermal are those big sunlight towers that you see. Now those are definitely green, but a lot of them have gas-fired backup as part of the system. And so the criteria that we have give some percentages on what that can be. So if the gas-fired backup is 50% of energy generation, then that's just not quite enough to make that project a part of the low carbon future. And it has to be instead below 15%. So that's just one example of how the criteria go into detail for issuers around what types of assets that they can qualify as green. In transport, there are per passenger figures on energy efficiency and emissions, but I won't go into all the details on that. But there are details on our website as well. So what backs up the definitions around what is green is sets of principles and standards across the world. I've mentioned that at a country level, there are various standards and regulations and guidelines in place, but there are also some that are global. So the green bond principles and the green loan principles are a global set of criteria that give a broad set of eligibility criteria for what a green bond can finance. And then the process around how an issuer selects the projects, how it tracks and manages the proceeds, and how it reports back. So it gives some broad categories and a very good framework for issuers. The climate bonds taxonomy and standard builds on that, so it uses the green bond principles and then gives much more detail at the sector level, and also provides a certification and verification process is required in order to receive a climate bond certified benchmark. I mentioned the ASEAN Green Bond Standards already. These are based on the Green Bond Principles. They're aligned with the Climate Bonds Taxonomy as well. And they have some disclosure requirements around eligible projects and disclosure requirements around reporting. And they have recommendations that issuers should also obtain external review from external parties. So within the region, just to finish off with a few examples, here are some of the bonds that have been issued. The Indian Railway Finance Corporation, a $500 million bond issued in 2017, finances railway and public transport, and it was certified by the Climate Bonds Initiative. I've already mentioned the Indonesia Sovereign Green Bond. That was a very large green sukuk, and the proceeds went to finance renewable energy, transport, waste, and various other resilience projects. And then in the Philippines, AP Renewables also issued a certified climate bond and was the first in the region. That was a few years ago, and that financed geothermal energy. So that's kind of a very broad brush wrap up of green bonds in the time that I've got for today, but there's plenty of time for discussion. And also just wanted to direct you to, we have a lot of resources on the Climate Bonds website about how to issue a green bond, green sovereign bonds, city bonds, the role of stock exchanges, and a myriad of other topics specific to countries and other topics. So you can go and have a look there, which should give you lots of information. I was also asked to give some questions to the participants around what things they were most interested in. So I think that what I would like to find out from you is what is most interesting, what you're most interested in understanding about green bonds, and also what support or information is needed to grow green bond markets in your country. So that's my broad overview. Back to the organizers I think are going to do the question time. Hello. Nikhil?
Hello, Anandan here from Asia Let's Partnership. So we have around 10 minutes for open discussion. So the participants can unmute themselves and can ask questions.
Sorry, we have already got questions in the questions box. So we could probably take some of these as possible, given the time, one by one. So, Bridget, the first question from Alex Fisher. Why does government have to be involved in mobilizing climate investments through green bonds, even if there is already huge demand out there, like you pointed out?
Thanks very much, and that is a good question. So there are a few points to cover. So the government does not have to be involved, firstly to say, but it can be very useful in being a catalyst in some markets, and there are a few reasons for that. So within Europe and the States, where there are large and active bond markets already, the need for governments is much less. There is still some requirements and some usefulness from a standards and regulation point of view, but that's more about transparency and requiring transparency or providing guidance on reporting that can be very helpful. But in a large and very active bond market, in order to have a very large green bond market, government is not so necessary. But in other markets, the government can be hugely useful in providing liquidity to the market. A lot of investors will require liquidity. Governments can also help in providing a case study. So particularly local governments have been useful in Australia and in other parts of the world, and even in the US, at issuing a green bond that provides a benchmark for other issuers to follow and provides a test case. So the green bond market is fairly well known to some people, but for some issuers, there's still a great deal of unknown, and they don't understand the market very well, the issuance process, and all the things that come with it. And so a government stepping and issuing a green bond, or a local government issuing a sub-sovereign bond, can be very helpful in providing a spotlight, as it were, to other investors and a case study for them to follow. So that can be very useful for governments as well. In terms of demand, yes, there is a large amount of demand out there, but governments can also be helpful in providing credit enhancement or some kind of backing for projects which don't achieve all the rights, don't have all the right credentials for all types of investors. So a lot of investors are interested in high investment grade bonds, and not all projects and not all issuers, particularly outside of large bond markets, they don't all meet those criteria. So governments and development banks in particular can be helpful in providing credit enhancement and backing for those projects. And there are some examples of that around the world where that's taking place. So I hope that gives you some ideas.
Thank you. The next one again from Alex. If you could just respond to this in a minute. So looking at the pie chart of 2017 figures and the definition of what is green, it occurs that green bonds are not equivalent with climate investment. A lot of green investments seem to go into investments which would not be labeled as climate investments. So are there any pure climate investment scheme or bonds out there?
Yeah, so the green bond market has evolved. It started off very much more in the climate space, so energy efficiency in particular, but it has evolved beyond that quite a lot, and now includes a range of environmental and more green investments, as you rightly point out. The Climate Bonds Initiative taxonomy. So that's the slide here. The Climate Bond Initiative really tries to deal with climate-related investments. And so all of those sectors and parts of the economy, as they relate to climate, is how how the criteria are defined, rather than the much broader green criteria. So yeah, but that's one way. So the Climate Bonds Initiative is really looking at the climate part of the investment, and the certification is called Climate Bonds Certified, so it's really the climate part. But the rest of the market is broader than that, and includes other investments. That's you know, not necessarily a bad thing. It just can be harder to define some of those sectors. So there are challenges in that, and there are different organizations working on that. I don't know if that answers your question, other than to say they are there are different definitions of what a green bond can be, and it's broader than climate.
Thanks, Bijay. There are a few more questions, but I think we'll just take one more which has been sent, and the rest we can respond to over email. The last one is from Firadol. Curious to know more about green bond and off-grid solution. Can you please share any development example or perspective on this?
Let me think if I've got any good examples of that. When you're talking about off-grid solutions, I'm assuming you mean kind of small, like solar projects off the grid and that kind of scenario. There are definitely there's a lot going on in this space, but the role of bonds, bonds can definitely help, but they're going to be much smaller. So there've been some retail bonds in the UK to do with rooftop solar. In Australia, it's not technically off-grid, but also rooftop solar. There's been a bond issued by Flexi Group, which is a asset-backed security based on loan receivables, also from rooftop solar in residential areas. So there's some examples, but I think you're looking really, I think that your question is much more to do with more of like much further away from the grid solutions. There is a lot of activity going on in this space, and the bonds certainly can help in the space, but because bonds require quite large projects to attract investors generally, off-grid projects can often be too small to attract bond financing. It's not to say that they can't, but that's going to be a very small percentage of the market. So to date, most of the projects are largely to do with larger infrastructure projects, and that's just to do with the nature of the bond market. But there are ongoing retail options for smaller bonds, and there are smaller bond projects that could also deal with off-grid solutions. I'm not so sure if that answers your question, but just to say that the bond market is certainly skewed towards larger projects just because of the nature of the size of the transactions. But there is activity in the off-grid space as well. I'm happy to follow up on email more about that.
Thank you. Alexia, would you like to chip in quickly? Yeah, thanks for the questions. We have a lot more questions, and in the interest of time, we'll surely get back over email with responses. So now we'll hand it over to Alexia, who will be presenting.
Can you hear me now?
Yes.
Okay, great. Sorry, I was muted in two places. Great, and everyone can see my screen? I'll take that as a yes. Great, thanks everyone. This is Alexei Kelly, I'm the co-chair of the Finance Working Group, and I'm gonna talk today about a separate but related set of issues around blending finance to address specific low carbon capital gaps. And thanks, Bridget, for the excellent overview of green bonds. I think there's clearly lots and lots to talk about here and a lot of detail to go into on both of these topics. We could easily spend a couple of days digging in on these, and we hope to be able to do that in an in-person workshop. But the purpose of this conversation is really to provide some framing and an opportunity for us to get oriented at a high level to the key areas that the community of practice is going to focus on, and to provide some framing and introductory information. So I won't spend a lot of time on the Finance Working Group, but just so you know who we are the Finance Working Group at the LEDS GP, and we provide support to the regional platforms and LEDS GP members to really look at accelerating investment into low emissions development through targeted technical collaboration, peer learning, and what we hope will result in innovative public-private partnerships. We're also developing a specific set of resources. We have a resource guide for NDC finance that's on our website. That's a nice annotated set of information related to both resources and literature on NDC finance, as well as webinars and other knowledge products available for your support. We're really looking to work together and leverage the communities of practice and the LEDS GP network as an opportunity to drive and start to scale climate investment. I think the numbers that Bridget was just providing and that we've been hearing about the need to mobilize trillions of dollars in really the next decade in order to both facilitate the low carbon economy transition and to begin to adapt to what is already a very rapidly changing climate. Certainly impacts that many of you are feeling in your countries. I know already we're certainly feeling them here in California. We have the worst wildfire season in the history of the state currently going on right now. And certainly those impacts are fueled by climate change. So there's a real need to start thinking more holistically about the issue of climate finance and figuring out both mitigation strategies as well as opportunities to mobilize resources and financing into climate change resilience. The communities of practice are our shared and collective opportunity to work on these things and on these issues that are, we hope, related to your day jobs. So the idea is that we can use the community of practice to learn from one another and to work intensively on challenges that we're all facing in our day-to-day lives on key issues. So one of the things that we've heard from the members is a real interest in understanding blended finance. But what is blended finance? I think it's one of those terms that gets bandied about, and it's not always clear what exactly people are talking about. Broadly defined, and this is according to CPI and Convergence and others who work in this space, blended finance is the use of public or philanthropic capital to attract private sector investment. So we are trying to figure out ways to de-risk and bring in the private sector sooner than they would otherwise come to some of these emerging investment categories and sectors in many markets. Why do we need blended finance? In order to really understand the role that blended finance plays, we need to understand how the private sector thinks about investment opportunity. So at the most basic level, the private sector is always thinking about two basic things, risk and reward. If we want to attract the private sector into NDC and LEDS financing, we need to deliver them returns that are adjusted for risk. So at the end of the day, any investor is going to be thinking about what is the probability that I will lose my money or not, or get a relatively low return, and how does that stack up against my return opportunities? So blending capital is being used to address the risk-return mismatch and also to try and accelerate capital flows into sectors that might be close to being commercial, but aren't quite there yet. It's not a new concept, but I would say it's been really driving and gaining in popularity over the last 2 years, and it applies to many sectors and NDC objectives. So blending finance can be targeted specifically at adaptation and resilience projects, subnationals and cities, transportation, clean energy and energy access, and sustainable land use. In particular, in Asia and Africa, there's been a recent trend of really thinking about clean energy blended finance initiatives and vehicles. You can see there's been more than 50 new initiatives in the last couple of years based on a recent survey that the Climate Policy Institute undertook just in the clean energy sector. And this again is to help figure out how we can entice more private sector capital to come and invest in many either riskier markets that the capital markets don't traditionally like to play in, or in relatively new technology deployments or applications. How does blended finance work? So essentially, it's a structuring approach that allows us to take different types of capital, impact commercial capital, to invest alongside one another while each achieving their own objectives. And this happens in a variety of different structures and through a variety of different things. So the credit enhancement tools that Bridget was talking about, that DFIs and multilateral development banks can offer to bond issuers or municipalities who might not be creditworthy, that is a form of blending capital and using public resources to de-risk and attract in private capital in a situation where they would look at an investment opportunity and say, you know, I think this is just too risky compared to my other investment opportunities that are available to me, so I'm going to take a pass. So it's not just new funds, it's also bonds, notes, project finance, and even specific companies. Overall, though, what we're trying to do by blending finance is really bring in the private sector at scale much sooner than they would otherwise be able to come in. This is a complicated graph, but I think it's an important one because it really demonstrates the range of considerations that you need to take into account when you're thinking about a blended finance strategy. So it's really important to understand the problem that you're trying to solve and the specific capital pools that you're trying to attract into a specific investment opportunity. So the capital markets work in pretty specific ways, and different flavors of capital move under different conditions and with different return and risk combination profiles. So as you are thinking about how to mobilize capital at scale, you need to be thinking about the risk and reward kind of curve as things, earlier things tend to be higher risk, but also potentially higher reward. Later stage things tend to be lower reward, but lower risk. And so as you're thinking about who you're trying to de-risk and what you're trying to accomplish with your blending of capital, you really need to think about kind of where you fit both in the business and project finance cycle, as well as who your different segments of capital are that you're trying to bring in and what they need specifically in order to mobilize. So we want to talk just briefly about a couple of case studies. One is a new initiative called the Microgrid Investment Accelerator. And just for full disclosure, I'm actually a managing partner in this fund. So we launched, we call it MIA, in 2017 with grant support to Facebook to solve a very specific problem, which was that many microgrid developers working in emerging markets were having an incredibly difficult time raising private sector capital. So most of the microgrid market and most of the developers that are out there right now have managed to build between 1 and 5 microgrids. In India, it's more like between 1 and 15, with heavy government and philanthropic support. And they go out there to start raising venture capital or other types of capital, and there's a risk return mismatch because what they're doing is they're building infrastructure. They're not building the next widget that's going to scale massively and disrupt the telecom industry, for example. And so what we've done is work with governments, philanthropies, and corporate strategics to develop a capital stack and a set of investment products that meet the needs of the microgrid developers where they are today. So instruments that are able to absorb equity-like risk, but also have elements of debt so that you're not diluting out all of the growth potential, and repayment schedules that match the cash flows of microgrids as they're being implemented today. So clearly mobilizing resources for the nearly 1 billion people globally who currently live without any access to electricity, and the more than 1 billion people across the globe who don't have reliable access to electricity is going to require, I would say, a public-private partnership on an unprecedented scale if we're going to accomplish the SDG objective of sustainable energy for all by 2030. So MIA uses a variety of different capital to de-risk and attract in private sector capital, as well as to lower the overall operational costs of the fund itself. So this is a specific example of blending capital for a pre-commercial sector in very high-risk environments that require small ticket sizes. So again, to Bridget's point earlier, part of the challenges with the bond market is that the ticket sizes are just not large enough. People can't write large enough checks, which sounds like a weird problem to have, but is actually a very significant problem, even for concessionary sources of finance, like MDBs and DFIs. And for those of you who aren't familiar with the term concessionary means capital that's willing to accept a below market return, whatever that rate of return is for a specific market. The second case study that we wanted to touch on was Seekers Finance, which is a non-banking financial company in India that's regulated by the Reserve Bank of India. So it's, even though it's called a non-banking financial company, it operates more or less like a bank. They are a lending institution. And what they were trying to do was solve the challenge of access to debt at rates that the off-grid and distributed renewable energy and energy efficiency sectors could absorb. So local capital sources were having a very difficult time mobilizing capital into this space. And this is something we see a lot, and I'm sure many of you have seen in emerging markets where local financing institutions just aren't familiar with the technology. They aren't really comfortable with it. They don't understand how to price and assess the risk. And so they don't know how to price and issue financial products to help grow the market. So Seekers has been designed to provide a variety of different debt products, including venture debt and working capital, as well as pure project finance in the sustainable energy space. And one of the innovations that they've developed is something called a sustainable energy bond, which they are issuing themselves, and is really targeted much smaller denominations. So their first bond will be about $5 million, and it is focused specifically on providing smaller scale finance for distributed renewable energy generation. Really intended for impact investors. Similarly with MIA, what we see is impact investors and corporate strategics that are interested in getting a toehold on this market. So if you're thinking about getting into designing a blended capital facility, there's a few considerations that might be worth keeping in mind. One, and I think this is incredibly important, you need to understand the problem you're trying to solve. So every kind of capital constraint in different sectors is slightly different. There is no kind of one-size-fits-all blended capital solution, I'm sorry to say. But if you talk to the private sector, they will tell you where the gaps in your financing ecosystem are. Any renewable energy developer or financier in a given market will be able to rattle off the sort of top 3 or 4 policy and regulatory and capital market impediments that are slowing their ability to grow their business in a 10-minute conversation. You also need to innovate incrementally. And what I mean by that is blending capital is still new, and it's important to kind of bring people along. So change maybe one thing, ask them to take a little more risk or a slightly lower return, but don't ask them to invest in a whole new structure or a dramatically new product and take a lower return. You need to kind of think about the laws of capital, and you can bend them, but you can't break them. You also need to plan to fund the design process. So it always takes longer than you think it will. And probably costs more. There's not insignificant legal, time, human resource considerations into this area. You also need to build flexibility into everything, and I mean everything. This is, a rapidly moving space, and you really want your investment vehicle and the agreements that you enter into with your partners, your funding partners, your investees, to be able to adapt with the market as it evolves. It's also really important to have an anchor or a lead investor. So one of the things that the private sector really looks for is who's in and who is kind of serving as the anchor investor in a specific initiative. So finding that strategic anchor, ideally one representative from the public sector and one from the philanthropic or one from the private sector and one from the philanthropic or public sector. But, even just one representative from one of those sectors is incredibly important. And most of the catalytic blended capital funds that we see start quite small. So they start with a couple of $1 million or $5 million. They build track record, they refine their processes and approaches, and then they scale from there. So there's a lot of information available. We did a blended finance webinar with the Climate Policy Initiative just a couple of months ago. Convergence Finance is also an excellent set of resources. The Blended Finance Task Force has been scaling and really driving a lot of new information. And these resources and links here are available for additional kind of insight. So interested to hear from the group whether you have other examples of or experience with blended capital vehicles or efforts, and which topics related to blended finance specifically you're most interested in working with others on. And this, given the relatively short amount of time we have until the end of the session, I think using this next 10 minutes to kind of talk both specifically about blended finance, but also additional questions you might have on green bonds and or specific things that you would like to dig deeper on through our work here as a community under the community of practice would be really great.
Thanks, Alexia. So yeah, if anyone has any questions, you can either type it in the question box or also raise your hand and we can unmute you. Yeah, Mr. Ken.
Hello. I just wanted to really wanted to clear my doubt on the blended finance on the market. I was wondering whether this seems to be more of PPP model type, because ultimately is the two stakeholders coming together and investing on the project. But here in this blended finance, so I think I try to understand that it's more on climate investment related type. So otherwise, the whole context is more on PPP kind of investment or model. So would you like to share light on this?
Yeah, this is Alexia. I think that's right. So and as kind of noted in the beginning of the presentation, the purpose of blended finance in most instances is to identify ways in which we can help de-risk and bring in the private sector. So the public-private partnership aspect of this is very important, and bringing in that private sector investment sooner than it would otherwise be able to come on purely commercial terms is in fact the objective of blending finance as a general matter.
Thank you.
Thank you. We have
may I have a question?
Sorry.
Hello.
Yes, may I have a question?
Yes.
I'm Dong from Vietnam regarding the blended capital. We have the most blended capital mechanism in Vietnam is PPP, but just a new development from when the time we have the law of public investment. And until now, we have some circulars and decrees regarding to implementing PPP. But I see that the most PPP project in Vietnam is focused on transport infrastructure like road construction, not many relating to climate change or green projects. So can you share some experience or example how to promote, how to persuade the private sector, private partners who participate in PPP mechanism to promote rainforest. Thank you.
Yeah, thank you. That's a really important point, and a very good one, which is that, you know, public-private partnerships have been used for infrastructure finance for decades. It's one of the primary means of accelerating investment into these spaces. And I think there's a huge amount of opportunity for us to look at kind of how PPPs have traditionally been structured for infrastructure development, transportation system development, and think about how we apply some of those constructs financing market and started to overlay climate change considerations onto it. There's a similar mapping process that I think needs to be done for public-private partnerships and blending finance that enables us to really connect the dots across those different sectors and models. And this gets back to the kind of bending the laws of capital, right? Anywhere that we, from a climate finance perspective, can find existing financial instruments and pathways that the capital markets are comfortable with, and just tweak them a little bit to redirect the flows into the places that we want them to be going, which is, of course, low carbon, climate resilient infrastructure. That's, I think, where we collectively as the climate finance community should really be spending our time.
Okay, thank you.
But curious to hear thoughts, you know, from you all just on what would be most useful there, and how we could learn from Vietnam's experience in this space in particular.
Yeah. Next, we have a question from Sandeep Bhattacharya. Go on.
Hi. Yeah. So, from what I understand of the markets, at least in India right now, there are plenty of opportunities, you know, which can benefit from these kind of stuff. And the Indian government has a scheme called the viability gap funding, but it has its own limitations as well. And not every evolving technology which will become commercial maybe in 5 years hence finds it difficult to access all of it. So is there a kind of centralized source of information about which foundation or which source is interested in which segment and in which country, so that, you know, we make it a lot more practical and get things done? I mean, we, as a part of our mandate to develop the bond market, are in touch with various people who will be willing to look at structuring projects so long as they have the guidance on who's willing to do what for whom, at what scale, what is the minimum transaction size. This is what, is there some centralized space where we can access this? Or try to make one.
Great, thanks. Nikhil or Anandan, could you guys summarize the question for me quickly, because I dropped off in the middle of it and had to dial back in.
Should I repeat?
Sure, yeah, quickly if you wouldn't mind. Sorry.
Yeah, no problem. So on the ground, at least in India, what we can see is that there are plenty of opportunities for this in various fields in climate finance, which includes, you know, maybe an installation at a remote place, a rooftop solar at a remote place, which can pay back but not the whole amount, or a decentralized waste to energy management, which can pay back but not the entire capex because it still needs to be more efficient. So there are plenty of opportunities here. What I'm asking is that, can there be a centralized database or source of information about which source of the concessional finance is willing to come in which sector, in which country, so that, you know, this can be made a lot more practical?
A great question, and certainly something that we've been exploring, because I don't think that that exists yet, and I know how difficult it is to sort of track the landscape of concessionary sources of capital out there. I don't know, you know, doing a database I think would be quite intensive, but one of the things we've been talking about doing is setting up climate finance hubs within the regional secretariats with experts who really know the concessionary and private capital landscape in their regions and can help folks kind of connect to the right types of resources. So that's certainly something that we could explore.
Okay. Thank you. Yeah, we have another question from Neha Kumar.
Can you hear me?
Yes.
Yeah. So a somewhat related question, and I think what is intriguing as for blended finance is, if you could give us a sense of, you talked about it as a mechanism to accelerate private capital funding. So could you give us a sense of the extent of acceleration that blended finance model has been able to achieve? Where are these examples, and how actively is the blended finance community sort of engaging with mainstream finance community to bridge the gap? So that is one question. And second is, I think, again, you know, what Sandeep was asking in an extended question would be that are there any examples of blended finance projects scaling up and seeking other forms of finance as they mature? Or is it something that is becoming big in its own universe, in, you know, which implies that there are always going to be a big pipeline of projects or blended finance itself without really venturing out into the other realm of mainstream financing?
Yeah, those are all, thank you for those excellent questions. Those are all really important ones. And I think, especially given the time where I'm not going to be able to do them justice, but I think on the data side, we're very thin on blended finance just generally. And I think in terms of kind of mainstreaming, you know, many people see blending finance as a bridge mechanism to more traditional commercial sources of capital as technologies are proven and sectors scale. So that's certainly a core objective. But given the fact that we are at time, I want to hand it over to the ALP team just to talk briefly through next steps. And thank you all for your participation. I'm sorry we don't have more time to talk about this, but we will certainly, this is the first of what we hope will be many conversations. And we look forward to working with you all regarding how we can best support your efforts and how you can support each other's efforts in really scaling mobilization of both green bonds and blended capital across Asia. And feel free to send us emails or any other pieces of input. We'll have a short survey after this where you can provide input on areas that you're interested in exploring further.
Thank you, Alexia.
And anything else to add, guys?
So thank you everyone for the questions. We'll definitely be responding, and also this is a platform for sharing resources, so that will be done in the coming weeks and months going on. Yeah, so we'll just show the slides. Give us a second, Alexia. Can you please go on to the next slide? So Alexia, over to you on the next steps.
Great. So while we're finding the slide, I know we're running over. So in terms of next steps, please do send your input and feedback to us regarding which topics you would be most interested in exploring. And also, we will be organizing what we hope will be the first in-person meeting of the community of practice in October, likely in India. So we'll follow up with additional information about that. And please feel free to reach out to either Bridget or myself for additional information regarding engaging in the community of practice or on green bonds or blended finance. So thank you very much. With that, we will conclude the webinar for today, and we will look forward to working with you all in the future.
Hi everyone. Before you sign out, we also request you to please participate in the survey poll at the end of this webinar to help us serve better and to come up with other priority topics that you want this communities of practice to address. Thank you.
Yeah. So thank you everyone for the feedback and really great questions. Sorry we are unable to take this and respond, but we'll definitely factor this in the upcoming sessions and we'll get back to you over email. Thank you again for your participation and your interest and making this really interactive. Sorry, Anandan, anything to add or we can close now?
We can we can wait for some time so that people can complete their survey polls.
Yeah, okay. Thank you.
Thank you.
Thank you, everyone. Good night.
Thank you. Bye.
Yeah. Thank you, everyone.
Thank you.